All right, let's go. It's Friday. It's Friday. It's been a long week. Let's get it going. We got Robert Marcin. I'm Ben Brey and Bob Morris. We're gonna talk about some energy and those one of Bob's small caps. So Bob, let's get it off. Robert, let's get it off. Get it going. What tell you got today?
I've recommended Arteris here in the past. AIP is the ticker. I've actually publicly shared trades, both buying and selling, because I did buy and I did take a significant trim. I think the buy mention was in the 7 range. The trim was 12. I've owned it now 2 years with a basis of about 380. It came out public in the 20s and went to 3 a couple of years ago. And it was stupid cheap for what it is. So what does Arteris do? I have some time to talk about this since I'm only talking about one stock.
Yep.
So what Arteris does, it's created an IP book of system on chip networking. So a semiconductor is a discrete device. Then they put blocks of IP on one chip, call that a system on a chip, SoC. And that needs its own network, just like a computer needs a network, a chip needs its own network. So they sell and license the IP so that companies could take their book of designs and their capability and create the NOC, network on chip IP, faster and better than a semiconductor company could do it themselves, because that's all they do. It's all network on chip all the time for this company, basically. That's all they specialize in. And they have over 850 designs for SoCs in the last 5 years. And it's a very unique, very arcane, artsy technology that they have just announced a phenomenal new product in, but that's a separate topic I'll get to. So the company announced 22% sales growth. It brought the year up to 7. They didn't have a very good year, and they've had a pretty poor 2 years since I've owned the stock. But finally, the 20% growth that they promised on their IPO is starting to come around. And it's really being led by SoCs for AI, not data centers. They do smaller AI projects. So it's really edge AI products and accelerators, not the main chips that NVIDIA is doing. NVIDIA does its own network on chips. They don't need Arteris. And their IP was really aimed at cell phones when they began it. So it's really a smaller processing product for lower power consumption. So the company had 14 new customers. They got into a new business for doing microcontrollers, and they're getting complicated enough to use these guys' NOC technology. So the business is finally starting to gain some real growth traction. They gave an outlook of 15 to 25% sales growth for this year. I'm expecting the high end of the range. And for the company at 90% gross margins, but they spend 50% on R&D and the other 50% on SG&A. And that makes them about break even this year on a profitability basis. But a company growing a company with 90% gross margins growing 20 to 25% is hard to find these days, especially the 90% gross margin aspect of the business model. So once they achieve profitability, the incremental revenue growth is going to be extremely profitable for this company. And that should happen next year when they do 85 million in revenue. They should break even or make a small profit. They did 57 million last year. I'm looking for 70 million this year, up from 57, and then 85 million in 2026. And I think that's a conservative estimate. So it could be a little better. So the stock, which I bought at 3, I talked about it here at 7, sold a good chunk of it at 12, and it's 9 today. And it's about 5.5, 6 times this year's EV to sales. And that's cheapish for an AI semiconductor IP play. But it's also with the 20-25% growth next year, it's down to 4.5 times 2026 sales. The best comparison for a business is ARM. And these guys are frenemies with ARM. They joint venture with them, and they also compete with them. ARM has the higher end NOC product for AI and for microprocessing, and these guys have the lower end mobile product. And in a way, is that within 3 to 5 years, ARM will own this company. It's an ideal acquisition candidate. But right now,
that's interesting. That's an interesting angle. Okay.
Right now, the CEO owns about 35% of the stock. So he has to decide he wants to sell because it can't be a hostile takeover. And they announced a new product, okay, that was stunning in its capability. So to do the network on chip component design of semiconductor can take a few weeks to a month. And they announced an AI product called NOC Next Gen product. Flex Gen, they call it. Their old product was Flex Knock. Now this is Flex Gen. It cuts the time down by 90% to do the NOC design. It does 90% of the layout automatically, and then human intervention does the final 10. And so it dramatically increases the amount of chip designs from a network on chip perspective that could be done. And that's using AI. So they're actually using AI for their own product to create a massive increase in productivity. And the biggest part of the market is insourced by their customers. So as I said, a lot of the big guys use their own NOC teams. It's a backwater part of the semiconductor design business. It's where they put the C students, I've heard. If you're in this business, don't yell at me, but that's what I've heard. And with this productivity improvement, I would think that the customers could design more. They could do more jobs because they do have to have field engineers that go out and help the customers. And they could only do 6 jobs a year before. It took them about 2 months to do a job. So now if they could do them 10 times faster, they can go from doing 6 to 40 or 50 maybe. We'll see how it works. Not that they won't have that much demand overnight, but they were gated. This company's revenue was gated by field engineers that helped the companies design these chips. So maybe that 20-25% revenue growth could spike in the next few years. So it's for an AI play, it's extremely cheap. For a 95% gross margin with 20% sales growth, it's extremely cheap at only 4.5 times EV to sales. But it's also something that you have to buy and hold longer term. I'm not buying it yet. The stock I sold at 12. I'm not yet buying at 9, but at 8, and if it ever gets under 8, that's a bad day in the stock.
It looks like the 200 days hovering between 8 and 8.50 or $8 and $9 somewhere in there, and so like that's like you get another 10%, and that you would add a little bit is what you're saying. Is that right?
Exactly, 10% down, and I'm rebuying what I sold. Exactly what I sold it. If I could buy back at 8 what I sold at 12 and change, I would buy it back in a heartbeat. Correct.
And you think, when would a buyout potentially occur? Obviously, you don't know, so I'm making you guess. But would it be within the next year, or do they got to accomplish a few things that they would get to that point?
The CEO is not a young man, and this is his second or third startup, but he does want to get this to $100 million. And if then ARM makes him a too good to be true offer, I don't know. He does want to build a dynasty. He thinks you remember when semiconductor design software didn't exist as a third-party product? In the original part of the semiconductor business, back in the 80s and 90s, you had to design your own semiconductors. You had to create the software to use to design the semiconductor at the semiconductor. Cadence and Synopsys didn't exist, so you couldn't purchase this. So, he thinks he's at that stage where everybody's going to outsource this, and this could be a $200 or $300 million business in 10 years. He has big ambitions. I would think he would have to at least partially fulfill those big ambitions before he'd want to sell.
Okay. All right. That sounds good. All right. Let's move it on over to Bob Morris. What do you got today, Bob? What are you talking about the energy patch?
Yeah, thanks, Ben. So everybody thinks earnings season's over, but it's just getting started for the E&P companies. We had the integrators, Chevron, Exxon, Conoco report. But in the past week, we've gotten the first of the E&P names. And what's clear here is that these companies are continuing to see effectively margin expansion through continued improvements in drilling efficiencies and better well performance across the board. And this is going to continue through this year. And so you had 2 gas names report in the past week, EQT and Intero, and 2 more oil-focused names, Devon and Oxy. And what was interesting is that while every company effectively beat on their guidance for the quarter, some a little bit more than others. Three of the names, Intero, Devon, EQT, raised their guidance for 2025. Oxy's still looking at overall flat production for the year, but Oxy, even though they're keeping production flat for the year, they expect their drilling and completion costs to drop by another 7% this year. Equitable, or EQT in particular, was planning on running a third completion crew through the year. They're now going to drop that at the end of the first quarter. All this is due to the fact that they're drilling wells and completing wells faster and cheaper than they did a year ago, and they expect that trend to continue into this year. Now, at the same time, as I said, most of them bumped up guidance. Devon in particular bumped up their guidance for this year. So if you look over the past week or post their earnings results, Devon's had the biggest bump. They're up about 8% now from when they reported. And the interesting thing was the two gas names didn't do anything with their dividend. Both Devon and Oxy increased their dividend by 9%. And Devon had the biggest bump up in their guidance for both production this year and a reduction in their capital spending for this year relative to the other companies. So that's really what drove that outperformance on Devon. I don't own Devon. Devon's becoming more intriguing here. It was a big underperformer last year, but this year, over 50% of the budget will go to the Permian Basin. So I jokingly said they got the memo that you really need to focus on the Permian, which they're doing more of. And the Eagle Ford is doing really well for them also. So that's a name I'm doing more work on and looking at more closely after sharp underperformance last year and given their outlook for this year. On the gas names, I own EQT. I want to own more of it. I'm watching it here to see if we pull back. What was interesting is despite the good quarters on both EQT and Intero, they're now down from where they were prior to going into earnings despite the good earnings. And that's really been driven by what's going on with natural gas prices. They've popped on the earnings results on just gas being very strong. And then as people look through the next month or so as to the end of this frigid cold weather that's now put us in a position of having a year-over-year storage deficit for natural gas and a much colder than normal winter, gas prices are up here at $4.30. And I think the market's sort of saying it probably doesn't get a lot better from here, and those stocks have pulled back. That's fine. I own EQT. I own Expand Energy. It'll report next week. I want to own more of both of those names. So I'm just watching to see if we continue to see a pullback in those names and get them a little bit cheaper. The other thing I'd point out here is that as companies continue to generate excess free cash flow, they're not looking to pay special dividends. Even though Oxy and Devon increased their base dividend, everybody's looking at share repurchases. That's the name of the game. And everybody's going to have excess free cash flow here. Even companies like Devon that continues to pay down debt and needs to do that, they stepped aside and said, wait, we're actually going to buy back a bunch of stock here in the fourth quarter, despite the fact that our top priority is paying down debt. So you're going to continue to see all these companies repurchase shares. And going forward from here, you'll see probably even better guidance out of the remaining companies report. The name that in particular I've talked about wanting or expecting to outperform or do better on the quarter is EOG. And it's interesting, they've outperformed even more so in the past week. I think apart from Devon, been one of the best performers. I think people saying, oh yeah, these other names like Devon and Oxy are outperforming on their guidance. And we're probably going to see that, if not more, from EOG here when they report next week. It's interesting. This is bad. The thing I'd say, this is bad for the oil field service companies. And the fact is, nobody's going along with the whole drill baby drill mantra. I've talked about it. Robert's talked about it, but nobody's bumping up production. EQT is basically keeping their production flat. Intero is basically keeping their production flat to maybe slightly up. Oxy's going to be flat. Devon's going to be up slightly. But everybody's saying, look, we're sticking to our discipline. We're not going to go out here despite where commodity prices are. We're not going to ramp up production here. We're going to continue to take that excess cash and return it to shareholders via continued increases in our base dividend and share repurchases. So,
Bob, I don't think anybody thinks of $70 oil as a great price.
With these margins, when you've got a 7% decline in your drilling and completion costs every year, those margins are really expanding at $70 oil. And what most companies talk about is they've got this deep inventory of projects that work below $40 a barrel. When they say work, they mean level 15% rate of return at below $40 per barrel. The fact is at 70, while they're keeping their production flat to maybe up slightly, they're generating tremendous excess free cash flow. So they like $70 oil. And the interesting thing
is a good price. It's not too high.
Yeah. But the interesting thing on the natural gas side is that though we have gas prices, the March contract today at $4.30, both EQT and Expand Energy at the Goldman conference last month, we wrote about this. They're both keeping their production flat because while they're saying, oh, look, things are great, efficiency, continued improvements, everything, they've thrown this little bit of a fear factor out there saying, yeah, but at the end of next year, Qatar's coming on with 6 BCF per day of LNG export capacity. We're going to have another 5 BCF per day pipeline capacity to the Gulf Coast of the U.S. for LNG exports. And they're saying, we don't know if that's going to be an oversupply situation here come the end of next year. So EQT said yesterday, no, we're not going into growth mode because we want to make sure that demand is sustainable. And we're a little bit worried about what might happen in the end of next year, even though we're going to have very strong prices in the interim or the medium term. So they're not willing to step up and start ramping or increasing production yet at this juncture. So it's interesting. I think on the one hand, near-term investors are still looking at these stocks somewhat as trading vehicles. And that's why I say when Expand and EQT and Intero underperformed after reporting good quarters, it was basically because people looked at a little bit of pullback in natural gas, even though from very high levels, and are looking near-term into the spring that maybe you see a further pullback in natural gas. And that's when they look to step in and buy them ahead of what should be a big increase in data center demand beginning at the end of this year. The bottom line is I still like the energy sector. I still think $70 oil is a good price and not reflected in the stocks. And I want to own more of EQT and Expand. I'm waiting for a pullback here into the spring if we get it in natural gas prices in the stocks. And I'm intrigued by Devon here, and I'm really looking forward. I own full position in EOG and looking forward to what they report next week.
Yeah, it's good. Look, it's an interesting time. It's the drill baby drill thing really hasn't gotten the traction that he wanted it to, huh? You can't just demand lower oil prices on this guy.
How many rigs does Trump operate?
The one company that got the
Trump
memo
in Western Texas.
He could go into the drilling business if he wants to start hiring neighbors or something. But he can't order other companies, private companies, public companies to drill. So.
The one company that got the memo on AI was Oxy. They're really the only company that came out and said, oh, we're really using AI to improve our drilling performance and everything that we're doing here. But effectively, everybody is. It's just amazing the drilling efficiency gains these companies continue to put up. Nobody's
what is working? What's a growth industry in the oil patch and the oil service business? Produced water handling. That's
no, I know
6-7% a year. The volumes are growing 6-7% a year, and there's nothing. The water cut keeps rising, and the natural gas cut keeps rising. So you have to deal with the natural gas associated gas, which is an issue for natural gas supply. But the produced water is becoming a bigger problem and growing mid to high single digits now. So it's pretty amazing. And there's 2 companies that are public that trade that theme, Arteris Water and Select Water. Those, the ARIS, WTTR.
No, you're absolutely right. And that's particularly in the Permian Basin. And that's where all the growth is. That's where people are focused. And that's why we're looking at some of these with Project Stargate. Some of these companies looking at building data centers in Texas because you've got plenty of cheap gas. And I haven't seen anything yet where they take that produced water and clean it up enough to use it in the cooling process for these data centers, which you need a lot of water, the cooling process in these data centers. So it's going to be interesting to see what happens with how many of these data centers they decide to put down in Texas or close to that cheap natural gas and all this water.
That would be, if they could reuse it in closed cooling systems, treat it enough to do that would be phenomenal for the data centers. They'd have low cost energy and low cost water for sure.
Yeah. The one thing that's interesting, we've got some time here, but it was interesting that Oxy, they've got this big carbon capture project. And finally, at the end of the earnings call, somebody asked him and said, under the new administration, what are you thinking about the carbon capture project? And they stumbled around a little bit and basically said 2 things. One, we're still talking to a lot of people in DC trying to explain to them, we need this. We still need to capture this carbon from the air. And 2, even if it doesn't come about from what it was under the prior administration, we still need CO2 to inject to do tertiary recovery in these oil reservoirs. But it was interesting. They stumbled a little bit around, we're trying to explain to everybody in DC that our project still should go forward. We should still get the subsidies and continue to do this thing where we're grabbing CO2 from the air and sticking it in the ground.
All right. Oh, good. All right, guys, you got anything else? Or we're going to call it and get on with our weekend? How about that?
No, I've put some shorts on and raised some cash for what that's worth. So we'll see if it
Yeah,
Hazel.
me too. I've got a bunch of stuff in short on there, and I got a interest rate bet, and we bought some high yield CDS yesterday. So if things roll a little bit, it's all that we're entering that squishy time of the year. Whenever it's like post OPEX in February through March, it always is just a little bit. We had SVB. There's a lot of March is always a tricky spot, I feel like, and then you get through there.
We needed a correction too, because it was getting to be
Agreed.
it was getting to be where the stupider shit you did, the more money you made, and the market's not that.
No, I'd hope not. Otherwise, no one has to come listen to us. So, anyways, guys, I think we'll call it. This is Ben Brey from Wall Street Beats. Come check us out on the website. We have the chat, we have research, we have smart guys like Bob Morris and Robert Marcin. So, take it easy and have a great weekend.
Thanks, everybody.